Good morning, everybody. This is Bryan Caprice from Keep Trading Simple, and this is our Wednesday morning market breakdown. I know some of you guys are, I see you guys on Monday mornings, and today I'm actually helping out on a Wednesday morning as well to go through the markets. Um, we'll just dive right in. I know we have some news that was just released, and just want to make sure we can kind of take advantage of that inside of the charts. Actually, I guess it's delayed slightly. It hasn't quite gotten released. There you go. It's just got released. The corridor goods is actually a good number today, so we'll have a bit of a spike, and we'll kind of see how that looks in the charts. But for those of you that are new and don't know who I am the president and CEO of Keep Trading Simple, and our goal is to keep trading as simple as possible and remove a lot of the distractions that the professionals say that you have to have in there. What we found is the more complicated you make this, the less success that people see. It only takes one little pothole or one little stick to trip over, and your trades become not profitable. So our goal is to keep you on the profitable side, and again, working with students. So I've been trading for a while, basically since the first tech bubble, and seen a lot of different market conditions, ups, downs, left, right, sideways, kind of even backwards. Been in the industry for a while. I've created a couple different programs for traders on the go. 30-minute trader and 5-minute trader are the two that I'm most known for that are Nadex-based courses, and those are for traders that have full-time jobs or don't want to sit in front of a computer for 10, 12 hours a day. I just don't believe in that. I'm a very big set and forget type mentality person. You'll see that when we get into the charts, that I'm very much, if it hits here, I'm willing to do this. If it does this, I'm willing to do that. I did work for one of the 3 big banks in the advisory division. Figured out very, very fast that financial advisors were not actually what I thought they were. Left there, went out back into the private sector, and was teaching people how to trade since that time. So I do pride myself on I'm a family man first. I'm not one of these guys that sits in front of a computer for 18 hours a day, drives Ferraris, wears gigantic gold watches. I'm all about my family, all about my kids. And you'll kind of see that in how I look at charts as well, about how I kind of base things. All right. So with that being said, let me cover the risk disclaimer real quick for Nadex. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and education purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decisions that you make are solely your responsibility. Now, past performance is not necessarily indicative of future results, and Nadex contracts are based on underlying asset classes, including Forex, stock index futures, and commodity futures. Now, I predominantly talk about stock index futures, but I will mention oil today as well. Trading can be volatile. Investors risk losing their investment on any given transaction. However, the design of Nadex contracts ensures that investors cannot lose more than the cost to enter the transaction. Nadex is subject to U.S. regulatory oversight by the CFTC. As I mention every week, one of the things that I like most about Nadex and just options in general is the fact that you can't lose more than the cost to enter the transaction. Obviously, with Nadex, it never happens. Obviously, you guys know in traditional options, when you're buying, you have rights. There's certain things that you can do. One of the biggest benefits, you guys are futures traders or Forex traders or anything like that, you know that, if you're on the wrong side of the trade, you can get this crazy thing called a margin call. Don't have that in Nadex, and it's one of the reasons why I think everybody should understand. I don't care how great of a trade, how great of a trader you are, I think everybody should understand how to trade Nadex. There are times and places for everything. All right. Now, normally what we do is we start off the week, and I talk about my top 3 for the week. Now, one of these just kind of happened a little while ago, and it was actually one of these happened yesterday. Was our consumer confidence number. That was number 3, and that kind of led to a big jump in. When I say big jump, I mean basically the only pair that actually did what it was supposed to do yesterday was the dollar-yen, okay, the U.S.-based pair, and that was because of that news release. So great news release for that one. Number 3 was, we hit the ball out of the park with that one. Number 2 and number 3, Thursday and Friday, is the final GDP numbers. As you guys know, the president has all eyes on GDP, and for the longest time, that's what he's gauging as his success as a president, was the overall market. And a lot of the things and policies he talks about have been designed to help the market. So GDP is more important now than it was under this presidency versus what it was under the last presidency. So definitely something to watch out for, particularly because it's expected to be a little bit better than what was forecast. It's supposed to be a 3.2 versus a 3.1. And remember, anything above 3 is supposedly not reachable, right? Is what everybody kept saying for years and years and years, and we've been doing it. Going into Friday, again, this would be CAD GDP. CAD's an interesting situation. CAD is kind of like the little brother of the United States. And if you guys have been keeping up with the news, they went to the United States to make sure that they signed. Mexico agreed. Canada's like, yep, sign it, let's go, let's move forward. So Canada's all business. They're in a very interesting time right now. if you remember what crashed our economy last time, it would be considered the housing bubble, right? Well, Canada right now, where they are, is in the process of trying and purposely trying to collapse their real estate. Okay. The reason why is because so much foreign money is coming over and people are buying houses with cash and things from like mainland China and things like that. They're investing over there, but nobody local can afford anything. An example is, you know, a duplex right now where my in-laws live. Right, a duplex next door to them. Very, very tiny house. I mean, very, very small, but it's a, it's a duplex. Each of them went for $920,000. And it's absolutely unreal. I live on the East Coast, which is not the cheapest real estate wise anyway. But I mean, something equivalent here would have been, 300,000, 350 probably at the most. And it's $920,000 there. So the prices are just so inflated. They're putting in rules and regulations. So they're trying to crash their real estate market right now to make it affordable for people that live there. So it's interesting because when we're seeing with GDP numbers, okay, when you're looking at GDP numbers, you're saying, okay, how great is your economy? Because you're going to crash part of it, but yet the rest of it wants to grow. So very interesting time right now that we have in Canada, okay? My wife is actually back there right now closing on a condo. And it's some of the rules and things that she's had to jump through are absolutely unreal that just would never fly in the States, but that's what they're doing. It is what it is. So again, very important to check this one out. We haven't seen as much movement. With that being said, I typically go over and we look at news releases for the week. One thing that I want to do is I typically we go over daily FX, and you guys should be able to see this. Let's make it a little bit bigger for you guys. This is a website called Forex Factory. It is another one that you use, but one of the tools that I use a lot is this top scanner section, if you guys can see it. The reason I use this top scanner section is because I am predominantly kind of an intraday trader, okay? I set and forget trades. I look at different levels, typically on like a 4-hour, but I will also drop down when I know I have an hour, 2 hours to sit in front of a chart. I'll look at lower time frames. So what I do is I have this set up with all basically the major pairs, right? And if you look on this left-hand side, I have 24-hour, 60-minute, 15-minute, 5-minute, and 24-hour. And what I'm looking for is the percent change and then the pip change, okay? The reason I do this is because I use ATR a lot in my analysis. Okay, if you guys don't use ATR, it's definitely worth researching. ATR basically tells you what a pair is capable of doing within a specific time frame. Okay, things like the pound yen. Okay, now the pound yen during the whole Brexit, if it's going to be approved, not approved, had an ATR, a daily ATR of about 140 to 160 during that time frame. Right now, it's down to 92 pips in a 24-hour period of time. Okay, so in 24 hours, even as much as it's contracted since the Brexit time, right? It's only moved 25 pips in 24 hours. Okay, so it gives me a lot of idea of what's happening in the market, right? Not a lot. This is the most volatile pair. It really hasn't moved much. It's retraced a little bit, and you can see we got a little bit of green on top, a little bit of red, and then a little bit of green again. But it hasn't moved a lot. The only one you can see over here that has done much, again, and that's off that consumer confidence number, very, very important number, is the dollar yen. Okay, and that one's moved 58, which is right around where its ATR is. Okay, Aussie yen isn't too far off. Pound yen obviously is off as well. So great little kind of website to be able to use for those kinds of things. All right. And if you look the next day, you guys can see this one actually doesn't have the forecast. This has a forecast of 3.1. Daily FX is saying that the forecast is a 3.2, so they're expecting it to be good. And then again, going into Friday, you can see Friday has a bit more news. Here is that 8:30 CAD release. Okay, and like I said, the previous was 0.5. They're saying it's a 0.2. So this has the potential to kind of, again, if this comes back up at 0.5, it's a heck of a surprise. We're going to watch the dollar CAD, as a pair drop. Okay, it's going to continue to go lower. All right, so that's kind of where we stand. So with that being said, if you're not using scanners like this to see how volatile or how much the markets are moving, definitely do it. It's not surprising. Okay, we are in the week before 4th of July. Okay, for those of you that don't know, 4th of July is next Thursday. All week I've thought it's been next Tuesday, but it's actually next Thursday. So being a shortened week, you'll start to see traders kind of get out of the market for the remainder of this week. As well as next week, we'll probably be pretty shy, right? Because obviously with the holiday on Thursday, people will take off Wednesday. If they're not off the entire week, we're just not going to see as much movement. And again, it's already starting to reflect inside of the charts. Okay, when we're seeing the euro only moving 26 and 24 hours. And again, this is pretty much all straight down, but it's only moved about 27. I mean, again, that's in comparison with the dollar Swiss, which is a pair that just really doesn't move tons. All right, so let's go into the charts. That's typically the best way to do it. And again, we'll see what type of opportunities exist today versus what we'll see over the remainder of the week, okay? So let's shrink this down. We'll shrink this down. Now, my charts may look a little bit busy here. I use these charts for a couple different kind of webinars and things. And what I do is I use boxes and things to pick out not only kind of profit or running areas, but also areas of buyers and sellers. Okay, so this green right here, it's actually blue, sorry, this one should be green. This was an area that we were looking for price to kind of go through, okay, as a profit target. I had a large extended range candle that I was looking to hit. Now, what we've been talking about on Mondays is where we are right now in any chart that really has the yen involved with it. You have this large spike candle, right? Large spike candles for people that read price analysis are a little bit difficult. And here's why, okay? If you are a price analysis trader, what you're doing is you are looking for the way the candles are formed, the bodies, the wicks, how they react, prior zones that things are hitting. Well, that's where it gets hard. When you have something like this, there's just a big spike up and down, there's a lot of hidden things behind it. And again, we thought it would go lower. We just didn't know where it would run into kind of an area of buyers. And it did. It kind of baselined. Then Monday, we were sitting right here, right? Monday would have been 24th, which is this green candle right here. And we said price broke down or ran into some buyers and then based, okay? We hadn't quite seen too much confirmation yet. On the 4 hour, though, we were able to see confirmation in this level right here, the 74.21. And you guys can see we had a gap down, price came up, it retraced, grabbed more orders, and then pushed. And then it kind of did the same situation here with this up, sideways, down, and then push up, okay? On the lower time frame, we're seeing the exact opposite. It's pushing higher, right? This is an old line. I can just delete that. It's pushed up, and now it's starting to retrace back down again. We do have a confirmation pattern to the downside, but a lot of this probably has to do with the news that we just saw, what is it, the durable goods orders, okay? Because it was a good corridor. The core durable good was really good. Then the durable good orders was actually bad. It's kind of a split release, but that's most likely why you're kind of seeing the bounce in here, this kind of push here. All right, so where we are right now, one area that I was looking for and I talked about on Monday is if price was able to get back up to this 75.43 area, I'd definitely be interested in kind of getting back in. And it got really, really close. We made it within about 9 pips from there before it kind of retraced and turned around. An area that I have marked off, and if you guys know how to do this in your charts, this kind of gap area, wherever the initiation of a gap area is typically a good place to start putting orders in. Okay. For me, I have alerts set at 75. I have it set at 75.50, which is actually just below the gap because I want to know when it gets close. But this is an area that I'm looking for right here, the 75.57 to 75.66, this kind of 10 pip range here. For taking this short. Okay, I was hoping that we could grind a little bit higher to get in, and we, again, sometimes this happens, you miss, but we'll kind of see if this can get back up again. I'm not taking anything long-term right now in this position. One, because obviously going into the holiday weekend, but two, because I still don't have a whole lot of clarity here, okay? Just with this wick. I want to see, again, I wanted to trigger, I would like it to go lower below 73, kind of 80-ish. I like it to break below the low here. But again, don't have that confirmation. We've pulled back up. We're right at this level of basing on the daily. We really kind of just ping right off of it. That's that 43 area. We just missed it. And that's what I'm really kind of looking for right now. But it's pulled back up to an area of basing. I would like it to retrace. And again, we're seeing that on the lower time frames. Okay. Going to little sister or little brother, or whatever you want to call her. Aussie yen. Or I'm sorry, Aussie dollar. Similar pattern. Okay, now this one we talked about on Monday had come up to this level of basing, and it really shot up and then kind of pulled back a bit, but then kind of pushed through again. Okay, so we invalidated ourselves on that one. Okay, and again, gotta love these drops sideways and then drops again, and it paused and it pulled back. It just grabbed more orders and pushed higher. So this is an area that we marked off on Monday on the 4 hour, saying if we got up into this range, up in this 69.90-ish area, we'd be looking to take shorts with a confirmation on a lower time frame. Okay, now we do have kind of a mixed bag on this one. You can see that we have, and again, these are indicators that we use just to assist us in reading candles, but this says it's sideways upward bias confirmed, right? Now, again, it does look like it's straight up in the air, and the reason why it's sideways confirmed is because this little kind of pullback candle, right? But you could argue, yes, this is an uptrend. It is. It's definitely an uptrend. This is, uptrend confirmed. And again, when you see up, up, you're typically looking for a downtrend or a down signal on the lower time frame. And that's kind of what we're seeing over here, right? We saw price kind of shoot up, and we know where it ran into. It ran into an area of sellers on a 4-hour chart, and we're starting to see it push back down again. We're seeing, and again, this is if you guys are unfamiliar with this pattern, we would call this a color change or a color confirmation, okay? Whenever you see a red, green, and then a red close below, again, that would be a color confirmation of a short. Now, this area here from 69.70 to 69.15, or 69.90 to 70.15, it's about 25 pips, so it's a little bit big of an area for me, just to take it, without getting a confirmation on a lower time frame, but definitely something I'll be looking at, kind of going short for the day. And again, you could use this with a call spread. You could do this with kind of an out of the money. You can do this with a 2-hour. These are all things that you can do, knowing that we've kind of bounced and reacted off of news. You could even drop a little bit lower on this one. Okay, now this is also a proxy for gold, so watch this one, and again, you can flip over and use your gold charts to trade this also. For those of you that are not clicking on commodities, don't forget you have crude oil, gold, natural gas, and silver that are all tradable inside of your Nadex account. All right, so again, this is a proxy for gold using a currency chart to show gold. Okay, dropping a little bit lower, let's go down to the euro pound. So, euro pound, I've been waiting for this thing to kind of collapse. We did get a bit of a pullback last week. We pulled back down to a level of basing, but we are right back up to where we were before. It's kind of peeked its head up in not the strongest of candles, but it literally poked above and then kind of collapsed right back down again. And we're kind of seeing that over here. Not the most beautiful example, right? It's a pop and then drop, right? It popped, collapsed all the way back down again, and then kind of is stabilized again inside of this area. You guys see this kind of like stabilization area? We popped up, we popped down, but we really have not left this kind of this 189.50-ish area. The way that I like using this pair is I don't trade this pair too often in and of itself. I use this pair to kind of enhance my trading odds using the euro dollar or the pound dollar. And here's why. You guys can see, obviously, the pound is weak, right? The euro is just skyrocketing higher, but, and I say but, we are hitting an area where we have sellers of the euro, okay? Which means we could have some pound strength in here. So with running up into an area where we have sellers of the euro, that typically lends well to if I want to take a position with dollar strength, where I think we're going to have euro weakness. Or vice versa, if I think we're going to have dollar weakness and it looks like the pound's going to start getting some strength, particularly against the euro, that could be, if I want to go dollar weakness, I would buy the pound dollar, if that makes sense. So I use this pair to kind of give me an insight into what I should do with those other two pairs, okay? Because this one, the spread's a little bit bigger than the other two, and there's a little bit more factors that are involved, okay? Now, if you are trading during the European session, then this is obviously one that you can, again, take advantage of. But right now, again, with kind of the whipsaw back and forth, the European traders have about 2 hours to go before they're out of this one. I'm looking for more kind of, I'd say, longer term shorts based off of being in this kind of daily level. And you can see this level of basing back and forth before it exploded at the bottom. And we're starting to already see a slowdown. Now, we had this very, very fast ascent here, right? And then we started doing the pullbacks. And then we had a big pullback, actually broke some basing level. And now we're hitting it again. So for me, it looks like we're approaching the top section. I know people will call this the curve or a couple different things. Whenever you're kind of extremes, you're always looking for some type of a reversal pattern. Do not have it yet. We are sideways on the lower time frames, but again, it's starting to position itself into that type of an area. Okay. Euro yen. So euro yen is going to have movement right now based off of what the overall stock market reaction is. Again, you can see that, again, boom, straight down in the last 30 minutes. Again, that would be based off the news release that just occurred. Because we have, what, 21 minutes to go. So this is all, this is all in the last 10 minutes that this candle has, driven straight down. And again, news-based trade. Interesting things about this one, though, as you guys can see. I can extend this across. This was an area of basing that we pulled off earlier. We talked about this, I guess on Monday, right? Monday would have been here. We basically bounced off this level of basing. And if you extend this to the right, you can see what we just hit off of, okay? We came back up and tested it. This was the first test on the 30-minute, okay? If I put this piece here, here's the first test, okay? And then, oops, here is what we just ran into, okay? That is what we hit here, and we're starting to push back down again. And it's only moved about 20 pips, but the ascent, you know, this fast ascent up typically kind of foreshadows that we're looking for somewhat of a profit target into this range right here, okay? Again, this was the initiation. This was the start of the move. We'll change this to green just to make it a little bit. Something along those lines is what we'd be looking for somewhat of a pullback, okay? And again, this is something, if you guys are familiar with 2 hours, again, go into the 2 hours. Not a bad thing to trade. You could trade this one, let's see, you could do this with there's a 9 to 11 that's lined up that gives you some time, but then again, there's a 11 a.m., there's a 3 p.m., there's a 7 p.m. So there's a lot of different trades, a lot of different strikes you have the ability to trade this one with. For this one, for me, for call spreads, again, I don't know if you guys look at call spreads too often. There is a 9 to 11 call spread that has a ceiling of 122.30. Okay, I don't know if you guys are familiar with floors and ceilings and things like that. But typically, I like to get in near the floor and ceiling. There is one of those, so if you guys know how to trade spreads, that's another option that you guys could go in there if you like this trade. Again, remember, do your own analysis. Don't take my advice for it. If your analysis is showing you the same thing, there are options out there. This one, unfortunately, does not have a touch bracket, so it's not one that you could trade with the touch brackets. Okay, but those would be the two options to trade that. Let's dive down into euro dollar. Give it a sec to load here. All right, so euro dollar. So we had talked about on Monday. There you go. We talked about Monday measured moves. Okay, this is something that actually we've been following. If you guys are missing the Monday mornings, definitely make sure you sign up for them. I know they're early. We were talking about measured moves, and you can see there's been multiples here. I left some of them on the chart. We actually moved some of them, but this is a common move. And Monday morning we measured it out, and it literally hit the peak yesterday, and then kind of started to collapse back down again. So, looking for a bit of a retracement, and then some, a similar move with dollar weakness back to the top side. We are in an uptrend setup situation, and what that means is we are in a defined uptrend, and we have a pullback with red. Now, this is where this one gets to be a little bit interesting. We have an uptrend setup on the daily, but we have a downtrend setup on the 4 hour. And you guys can see what we got real close to. Okay, we had a zone, a 4 hour sell zone right here. Let's go back and tweak this and make sure that it's correct. Yeah, we could use that one. That one's it's right there. I wonder if that's the one that hit. Did it hit the 1400 one? Yeah, it hit the 1400 one. All right, so this is what happened on this one. There's actually two here, and I like to stay more conservative with the way that I trade. Here's another zone right there, and again, this is based around a whole number, okay, the 1400. If you look to the right, whenever you have a level on top of a level, for me, I just stay conservative. I go to the top level. In this case, that's what it ran into, was the bottom of the two levels here, pushing back down again, and most likely it's going to probably head back down to this 113.35-ish range. We'll see if it's capable of doing that with a bit of dollar strength today, but it's just going sideways right now. I'm looking for a bit more of a pullback on this one, and then again, we'll see if we have the start of the next measured move. So for those of you that see, this measured move, by the way, is about 230 pips, and it's been taken, it's kind of a weekly trade that we've been setting up. That obviously, the fact that we've completed it and we're starting to pull back, we could be setting up for the next one. So just kind of keep that food for thought. If you guys are not watching Mondays, kind of look at these. It's about a 230 pip move. It happened here, it happened here, it actually happened here too. So I mean, it's happened a bunch of times, and we took this measured move off of this kind of push and rally back up again. Okay. All right, let's see, pound yen. So remember we talked about how the pound yen was not really moving tons, right? You're seeing movement now in the 30-minute. Again, it's because it's the yen pair and it's the dollar collapsing. Most likely this one will probably come back and retest into this area. But you'll see we're basically been kind of bouncing just back and forth inside of this channel. And actually the channel looks like it's been shortened slightly to there, okay? Getting smaller. On the daily, you'll see it's the same thing. It's come down and it's just gone sideways. Here's the ATR that I was talking about. As I said, here is Brexit, where basically in one day we would go up and then down and then up, a couple days, down, up and down. And we're literally bouncing back and forth between these two zones. Okay, this was basically 1 day of movement back and forth. It was about 200 pips. Now we're down to 91, and you can see it's basically flatlining. It just, again, it's like a heartbeat, right? It's like boop, 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 and now it's just flat. Even on the 4-hour, you're seeing it's just literally going back and forth. It's not a bad range. I mean, you're talking about, you know, about 100 pip range. But again, that 100 pip range is taking more than one day to occur. You know, in the last day, it's moved what 40, 50, about half its ATR. And you can see now, not only did we pop up this morning, but now we're retracing back down again to the same type of level. So unfortunately, this is summer trading. Again, we have this news reaction in the morning, but it looks like this one is not going to have the largest day unless there's some unforeseen news that we're looking for. But again, definitely look back. This is we're pretty low on the spectrum here, and the reason why we're seeing this kind of flat line is also, and I'll shrink this so you guys can see it. See where we're at right now? Price is here. Look to the left. It completed the blue box, which is the kind of candle that we wanted to. This should be green. Sorry, thought I had changed that, but I guess maybe I didn't save it. There was the green candle we wanted to take over, which would have been this green box here. But now we're into this wick, right? And remember I said price action is hard. Once we get wicks, there you go. And what did it do? It's literally bouncing here. I'll put a horizontal line on it so you guys can see it. That's where the wick starts, right there. And look what we've done since that time on a daily. You see how it's like literally bouncing off of it? Okay. So there are obviously buyers in there on this one. Again, harder buyers to see because it is stuck inside of a wick. And when you're looking at the lower time frames, again, you're seeing really not a lot of movement, not a lot of explosion, nothing really exciting, right, for me. Again, what I would do in this case, if you guys do have some time and you do want to get in there and trade this one today, instead of looking at daily 4-hour, 30-minute, drop this down to maybe 4-hour, 60 and 10, or 4-hour, 30 and 5. Drop it much, much lower. If you have a 2-hour window and that's all you have, go 35 and 1. 35 and 1 would be what you were looking for to be able to trade these as far as using your multiple time frame analysis. Pound dollar. So pound dollar's had some swings. Again, I'm keeping this area marked off because I'm looking for somewhat of a bounce continuation. So I'm leaving this bottom one there. I know that went below and then kind of came above it again. Again, it's kind of in this area. I'm trying to see if it's going to eat all the orders. Yeah, it's an area that's surrounding 126.00, somewhat of a psychological level. As you can see, you know, we had quite a bit of pullback. We grabbed this little area and it launched us higher. And then when it failed, again, we started this retracement to the way back down again. An entry for this one would have been right here. I'll just bring this one up. Entry was right in here. Okay. So this is one that we've been trailing to the downside, looking for an eventual profit target of 126.47. I'd actually raise it to 126.50. You want to front run that slightly being a round number. Again, this one does not have the yen associated with it, but it does have the dollar. And again, you guys can kind of see because of the news, you know, what we've seen in the last 30 minutes because of the news. You know, this thing basically heading straight down again. And that would have been the core durable goods order, okay? For me, if we get into this area, there's one of two things I'm looking for. Because we only drove a little bit into this zone, and there's, I mean, here, I'll make this a little bit bigger so you guys can see. Again, this may not be something that we hit today, but again, over the weekend, things like that, you may want to look at it. Technically speaking, all this is still free as an area where we could get in as buying area, okay? So this is still all clear. And that area is 126.40 to 126.26. So about a 15 pip range there. Two things that we can do out of this one. One, you could take this as a kind of a reversal and charge up. But number two, it would be a continuation to the downside. And in looking at the chart and analyzing this one, I'm leaning a little bit more towards that. And what I'd like to see in this one is what we would call a breakout retest. What that is basically it's a break of the zone, a pullback to the zone, and then obviously a collapse. Okay, it works in both directions. It's a momentum pattern. It's a momentum continuation pattern. And again, it's when you have that prior area of buyers and sellers, and then it becomes flipped and kind of, it goes through. And again, it's kind of like the old sayings that old support becomes new resistance and old resistance becomes support. It's not support resistance, it's supply and demand, buying and selling. So it is different. And a lot of times you'll see these for continuation patterns. You'll see that, okay? It's a momentum type trade. I'm actually leaning more to that side. A break of this area every test. And again, my stop loss is already there. It's, the other side. And looking for this one probably to come back down to 125.30-ish, about 60, 70 pips to the downside. Nice little trade there. Again, if we can get here by the end of the week and we can start the next week down here, I'd definitely be looking to put something on next week for that one. Some type of a weekly position. Although it is a shortened week because of 4th of July, so you just have to keep that in mind as well. Okay. Let's drop down and look at the dollar CAD. So as you can see, dollar CAD is sitting right now inside of an area where we saw a previous group of buyers, right? Price shot up at the top and we're waiting for it to do something. Now, this one's a little interesting. There is a bit of a base right here, right? So I'm looking out for this base above, and we got to figure out what it's going to do. Okay, we are showing downtrend. We are showing downtrend setup. We are showing downtrend setup, although your 30 minutes going to be kind of messy right now. Your 24-hour pip change on this one is only +2, so it's only moved 2 pips up in 24 hours. And you can see it's basically flatlined. This is what I'm looking for on Friday. Okay, like I said, Friday is a weird day because, again, it's going into a holiday week. But with that news, I think we can get a nice little burst out of it. I will drop down and look at 30-minute, 5-minute, and 1-minute charts about half hour before the news release, so at 8 a.m. Eastern time. And I'm going to look to see what price action is doing. I'm going to see if it's going to pull back into a zone, particularly something little like this. If I can get it to pull back to a zone here or kind of grind its way up about 10, 15 minutes before the release, I'm going to be looking at putting in a short-term binary position in, maybe a little bit farther out of the money, and trying to make 2 to 3 times what my risk is. Now, again, we'll see what direction it pushes in. I can't tell you up or down now. I got to wait till we get a little bit closer. Ideally, and again, this would be great if it does this, although we're a little bit far on the chain and got this little area here. If we can grind through this level and it pulls back for the news, like if we can grind down and it pulls back to a level, I'm all about that, because then we have, a daily kind of setup for the continuation to the downside, and then we'd have, obviously shorter term kind of pullbacks in the downtrend. So I didn't really like that one, but this is definitely one I'm going to be all eyes on Friday morning. Again, look for pullbacks about 10, 15 minutes before, look for some basing area, and then take that, particularly for me, I enjoy personally a little bit farther out of the money binaries, lower risk, and then, you get 2, 3 times your risk out of it and shut it down early, okay? Dollar Swiss. So dollar Swiss has moved about 35 pips. We had a very, very large drop, so we were expecting somewhat of a retrace back up again. This is not my favorite pair. I got to be honest with you guys. It does this stuff and just drives me crazy. You get like a pop and then it just does this. Okay. It's nice when it's going down like this. And again, this is because of geopolitical events. This is trade war, right? This pair moves when Trump talks about this trade war is happening. Iran's doing this. North Korea is shooting missiles. This is a flight to safety type trade. Okay. So if you're able to watch the markets enough, this is one of those pairs that if you don't watch it a lot, like I said, you can trade any chart if you understand technical analysis. Here's the caveat to this one, though. This one has its own kind of heartbeat because it's based off of, it's a reactionary pair. It's based off of geopolitical news. So that's something you got to be careful of, okay? Like I said, Trump is meeting with China during G20. I expect there to be some movement in this. I don't expect there to be a deal. I don't think there'll be a deal till later this fall, but I do expect something will come out of there. Some headline will come out of this. I'm assuming it's going to be more negative because whenever there's positive, he's got to counterbalance it with negative. I expect there'll be a little bit of a jump, but when that actual kind of news release is happening, it's going to be harder to kind of detail. But again, you're getting conflicting signals: down setup, up setup, up setup. Okay. I am looking. Again, I am looking at this longer term. I am not trading this one, just to be fully transparent. I am looking for it to retrace back up into this kind of parity level back at 1. I just need a little bit more of a catalyst to be able to get there. And again, that 1 also coincides with the last gap that we saw, and again, filling the gap to the upside. But it's quite a run at this point, especially getting a little bit later in the week. Last but not least, dollar yen. Okay, so we can see dollar yen. Obviously, dollar yen, because of the news, kind of spiked back down again. I am definitely into these. These are what we call racetracks. Okay, in positions like this. And again, this one we have to look on the smaller time frame for a bit of a confirmation. But it's a nice little trade. You had it banged off of a 4-hour zone here. It kind of popped up and it had already started to push down. News drove it to the downside as well. It's bringing it back to a level of basing down at 107, say 50-ish range. That would get you into this area. You have this extended range candle. I'm liking that. So I'm definitely a little bit more bearish with this one. Again, if it starts to make a push up and starts testing this, then obviously close your position early. If it gets above this 107.88, I think we can rally back up into this kind of level of 108.50. Same situation that we had in the other yen pairs. You got this wick, which I can't wait till this wick is just completely eaten up and gone. That's kind of where we're at. I'll shrink it for you guys. Price is currently here, right off this little pop. here was the low, 106.75, which is kind of right here. So wanted to grind down and keep going. Again, this pair is one of those ones that gets into, gets into some trends. Next level of buyers is, or I'm sorry, sellers is definitely the 108.50 range. But I think we're going to get a bit of a pullback and push down again. That's just my take on this one today. Okay. This one is, if you guys are not familiar with it, this is one of the touch bracket pairs. Okay. Again, if you're not trading touch brackets, definitely get out there and try them out in demo mode first before you go with live money. But this is one I will use 2 hours during the day, and I actually really like the 2 hour binaries for this one. One of the advantages for me for this one with the 2 hours is, oops, not that one, is that the spreads are a little bit closer, okay? If you guys are familiar with this one, these are only 6 apart, okay? Actually, I'm sorry, 4 pips apart, okay? Don't have as much ground to cover. The 30-minute ATR is about 8.8 or 9, okay? If they're only 6 pips apart, this has the, in 2 hours, it has the potential to move basically 3-4 strike prices in the time period. So nice little trade, nice little trades pop up on this one if you're not seeing it. So, all right, so that would be the last pair that we're looking at. That will be it for this morning, guys. Like I said, we try to run through as much as we can. If you guys have more questions for me, you can always attend the Monday morning sessions, or you can go to the website, keeptradingsimple.com. On Instagram, keep.trading.simple. Basically, that's it. There's no .com in that one. I add content about as far as what different setups look like on there. You can also email me, support@keeptradingsimple.com. If you have Discord, you're more than welcome to join us over there. That community, we actually just started that, so we're still adding people to it. You just click on the webpage, click on Discord, gain access, and you are in. So with that being said, I will let you guys go on your Wednesday. It's 9 o'clock. I will not see you guys next Monday morning, but I will see you the following weekend after that. Hope everybody has a great 4th and good trading out there. Make sure you guys protect yourself, keep your risk low, and I'll see you guys next time. Take care.